Based on the historical data and forecast, Bitcoin shows a downtrend with increased volatility. The RSI consistently dips below 50, indicating a bearish momentum, and recently reached oversold levels around 32. The forecast data suggests continued downward pressure, with prices potentially dropping to around $99,500. Considering the support level at $101,300 and the recent oversold RSI, I recommend a contrarian strategy aiming to capitalize on a potential bounce. We will implement a long position when the RSI reaches an oversold level of 30, with an entry price of $101,300. The stop loss will be set just below the support level at $100,800 to protect against further downside. The initial target price will be the nearest resistance level at $106,300, aiming for a quick profit. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band and the RSI is oversold, it signals a potential rebound. If the price rebounds and approaches the middle band, we will move the stop loss to break even to secure profits. If the price fails to reach the resistance level of $106,300 and shows signs of further decline, we will exit the position at $103,100. This combined RSI and Bollinger Band strategy aims to balance risk and reward, capitalizing on short-term price fluctuations while mitigating potential losses. The portfolio will allocate 60% to the RSI strategy and 40% to the Bollinger Band strategy, providing a balanced approach to trading Bitcoin. Based on the historical data and forecast, Ethereum has been experiencing a downtrend, with prices fluctuating significantly. The support price remains consistently at $3,280, while the resistance price has been around $3,790. The RSI has dipped below 30 on November 7, 2025, indicating an oversold condition, which suggests a potential bounce. The forecast for the next week indicates continued downward pressure, with prices expected to hover around $3,200 to $3,450. Given these factors, I recommend a contrarian strategy focusing on short-term gains. I propose a long position with an entry price of $3,270. We will set a stop loss at $3,210 to protect against further downside risk. The initial target price will be $3,410, aiming to capitalize on a potential rebound from the oversold RSI level. If the price reaches $3,410, we will move the stop loss to break even to secure profits and manage risk. If the price continues to fall below $3,210, we will exit the position to minimize losses. This strategy combines RSI signals with Bollinger Band analysis and support/resistance levels to optimize risk-reward ratio and maximize potential returns. Based on the historical data and forecast, XRP has been exhibiting a downtrend, with prices fluctuating around the $2.3 support level. The RSI consistently dipped below 50, reaching as low as 33.5, indicating oversold conditions. The forecast for the next week suggests a continuation of this downtrend, with prices hovering around $2.31 to $2.2. Considering these factors, my strategy will be a short position. I will initiate a short position at $2.32. Given the strong support at $2.3, I will place a stop-loss order at $2.35 to limit potential losses if the price unexpectedly reverses. My initial target price will be $2.2, aiming to capitalize on the anticipated downward movement. To refine this strategy, I will incorporate the Bollinger Bands. The price has been consistently trading near the lower band, confirming the bearish sentiment. If the price touches the lower Bollinger Band around $2.2, it would be a good opportunity to take profit. I will allocate 60% of my capital to this short strategy, 30% to a neutral strategy based on Bollinger Bands, and 10% to a long strategy if the RSI reaches 80. The neutral strategy will involve buying when the price touches the lower Bollinger Band and selling when it touches the upper Bollinger Band. The long strategy will involve buying when the RSI reaches 80 and selling when the RSI reaches 20. This diversified portfolio aims to maximize returns while mitigating risk. Based on the historical data and forecast, BNB has been exhibiting a downtrend. The price has consistently tested the support level of $936, and the RSI has frequently dipped below 40, indicating oversold conditions. The Bollinger Bands are also showing a narrowing trend, which often precedes a breakout. Given these factors, I recommend a contrarian strategy focused on anticipating a potential reversal. We will implement a buy strategy when the RSI reaches an oversold level of $32, which occurred on November 6, 2025. The entry price will be $950. To manage risk, we'll set a stop loss at $936, just below the established support level. The initial target price will be $1,000, aligning with the center of the Bollinger Bands and a potential bounce back point. To refine the strategy and enhance returns, we'll incorporate the forecast data. The forecast predicts a price range between $964 and $1,000 for the next week. If the price reaches $1,000, we'll adjust the target price to $1,060, near the lower Bollinger Band. This revised strategy combines RSI-based entry, support level stop loss, and Bollinger Band-aligned target prices, aiming for a balance between risk mitigation and capitalizing on a potential trend reversal. This portfolio offers a high probability of achieving high returns. Based on the historical data and forecast, Solana has been in a downtrend, breaking below the support level of $155 and reaching a low of $155. The RSI consistently indicates oversold conditions, particularly on November 7, 2025, with a reading of 29.2, suggesting a potential bounce. The Bollinger Bands show that the price is approaching the lower band, reinforcing the possibility of a short-term reversal. Therefore, I recommend a long position with an entry price of $151, a stop loss at $151, and a target price of $163. This strategy aims to capitalize on a potential oversold bounce and a short-term upward correction. To refine the portfolio, I suggest a combination of the three strategies. The primary strategy will be the long position at $151 with a stop loss at $151 and a target price of $163, capitalizing on the oversold RSI and the lower Bollinger Band. I will allocate 70% of the portfolio to this strategy. The remaining 30% will be allocated to a conservative strategy, holding until the price reaches the support level of $155, with a stop loss at $154. This diversified approach mitigates risk and maximizes potential returns by combining a high-risk, high-reward strategy with a more cautious approach. Based on the historical data and forecast, Tron shows a sideways trend with price fluctuations between the support of $0.292 and the resistance of $0.298. The RSI consistently hovers around the oversold level of 30, indicating potential for a bounce. The Bollinger Bands are narrowing, suggesting a period of consolidation before a potential breakout. Considering this, I propose a long position strategy targeting a modest profit while managing risk. We will enter a long position at $0.285, coinciding with the initial forecast price and the lower end of the recent trading range. A stop loss will be set at $0.274, just below the bottom of the Bollinger Bands, to limit potential losses. The target price will be $0.298, aligning with the resistance level. To refine this strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI crosses above 30 and the price touches the bottom of the Bollinger Bands, it confirms the entry signal. If the RSI reaches 80 or the price breaks above the upper Bollinger Band, it signals a potential exit. The portfolio will prioritize the long strategy due to the sideways trend and oversold RSI. This strategy offers a balance between potential gains and risk mitigation, aligning with a conservative yet profitable approach. The predicted price movement based on the forecast data suggests a sideways movement, making this a suitable strategy to capitalize on short-term fluctuations. Based on the historical data and forecast, Dogecoin has shown a downtrend from October 25, 2025, to November 7, 2025, with the price fluctuating between a support price of $0.162 and a resistance price of $0.182. The RSI has consistently remained below 50, indicating a weakening momentum, and the forecast for the next week predicts continued downward pressure, with prices ranging from $0.169 to $0.166. The Bollinger Bands show that the price has been approaching the lower band, suggesting potential oversold conditions, but the overall trend remains bearish. Therefore, a short position strategy is recommended. The entry price for the short position should be $0.179, coinciding with the recent price action and confirming the downtrend. A stop loss should be placed at $0.187, just above the upper Bollinger Band and slightly above the recent resistance, to limit potential losses if the price unexpectedly reverses. The target price should be $0.164, aligning with the forecast price and the lower Bollinger Band, providing a reasonable profit margin. This strategy combines the bearish trend, RSI readings, and Bollinger Bands analysis to maximize potential returns while managing risk. Based on the historical data and forecast, Cardano has shown a downtrend with significant volatility. The RSI consistently dips below 50, often entering oversold territory below 30, suggesting the asset is undervalued. The Bollinger Bands indicate periods of contraction and expansion, reflecting this volatility. The forecast prices for the next week remain relatively low, hovering around $0.53 to $0.55, further reinforcing a bearish outlook. Given the current oversold conditions and the forecast, I recommend a contrarian strategy focusing on short-term gains. We will implement a combined RSI and Bollinger Band strategy, with a focus on capitalizing on potential rebounds from support. The entry price for a long position will be $0.532 when the RSI is below 30 and the price touches the bottom of the Bollinger Bands. The stop loss will be set at $0.52, just below the support level, to protect against further downside risk. The initial target price will be $0.578, aiming to capture a quick profit as the price bounces back from the oversold condition. If the price reaches the target, we will consider moving the stop loss to the entry price to secure profits and potentially ride a further upward trend. This strategy aims to leverage the current undervalued state of Cardano and capitalize on short-term volatility. Based on the historical data and forecast, Wrapped Beacon ETH exhibits a clear downtrend, particularly evident in the recent price action and the forecasted decline. The price has consistently traded below the Bollinger Band center, and the RSI values have been predominantly below 50, indicating weakening momentum. The support price of $3,550 acts as a strong floor, while the resistance at $4,100 has repeatedly failed to hold. Considering this, I recommend a short selling strategy. Enter a short position at $3,730. Place a stop-loss order at $3,770 to protect against a potential upward reversal. Set a target price at $3,490, anticipating a significant decline given the prevailing downtrend and bearish forecast. To refine this strategy, we will incorporate the RSI and Bollinger Bands indicators. When the RSI falls below 30, indicating an oversold condition, it could signal a temporary bounce. However, given the overall downtrend, we will not consider a long position. Conversely, when the price approaches the lower band of the Bollinger Bands, it suggests a potential buying opportunity, but we will maintain the short position. Therefore, the core strategy remains short selling with an entry price of $3,730, a stop loss at $3,770, and a target price of $3,490, leveraging the prevailing bearish momentum and supportive technical indicators. Based on the historical data and forecast, Chainlink has been experiencing a downtrend recently, with the price fluctuating between a support of $14.7 and a resistance of $16.8. The RSI consistently dipped below 50, indicating a weakening momentum. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential oversold condition. Considering these factors, I recommend a contrarian strategy focusing on short-term gains. We will implement a combined strategy using RSI, Bollinger Bands, and support/resistance levels. My strategy involves a buy position when the RSI reaches an oversold level of 30 or below, and the price touches the support level of $14.7. The entry price will be $14.7. The stop loss will be set just below the support at $14.5 to mitigate potential losses if the downtrend continues. The target price will be the nearest resistance level, $15.8, providing a reasonable profit margin. If the RSI rebounds above 50 and the price breaks through the $15.8 resistance, we will consider a second entry with a slightly higher entry price of $15.8, a stop loss at $15.5, and a target price at $16.8. This combined approach aims to capitalize on short-term price fluctuations while managing risk effectively. Based on the historical data and forecast, the graph demonstrates a fluctuating trend with recent volatility. The RSI consistently hovers around the mid-range, indicating neither strong overbought nor oversold conditions. However, the recent dip and subsequent recovery suggest a potential for a short-term upward movement. Considering the support price of $0.0651 and the resistance price of $0.082, I recommend a moderate bullish strategy. We will enter a long position at $0.0612, placing a stop-loss order at $0.056 to limit potential losses. Our target price will be $0.0701, aiming for a reasonable profit. To refine this strategy, we will incorporate the Bollinger Bands. The center of the bands has been consistently around $0.0648, and the recent movement suggests the price is trending towards the upper band. If the price breaks above the upper band, it signals a strong bullish momentum, potentially pushing the target price higher. Conversely, if the price touches the lower band, it indicates a potential reversal, prompting us to tighten the stop-loss or exit the position. This combined approach, leveraging RSI for entry and exit signals and Bollinger Bands for confirmation, offers a balanced and adaptive investment strategy with a clear entry price of $0.0612, a stop-loss of $0.056, and a target price of $0.0701. Based on the historical data and forecast, Render shows a downtrend, particularly evident in the recent price action and the consistently low RSI readings below 30. The forecast data suggests continued sideways movement around $2.1, but the overall trend remains bearish. Considering the RSI is consistently below 50, indicating a potential oversold condition, I propose a contrarian strategy combined with Bollinger Bands analysis. We will initiate a long position when the price touches the support level of $2.38. The stop loss will be set just below the support level at $2.35 to mitigate risk. The initial target price will be the center of the Bollinger Bands, which is currently around $2.33. To maximize potential gains, we will implement a trailing stop-loss strategy. If the price moves above $2.5, we will move the stop-loss to $2.45. If the price continues to rise and reaches $2.7, we will move the stop-loss to $2.65. The final target price will be the resistance level of $3.36. This strategy balances the potential for gains with risk management, capitalizing on potential short-term bounces while protecting against further downside. The portfolio will be 60% long position, 20% short position, and 20% cash. Based on the historical data and forecast, Virtual's protocol exhibits a fluctuating trend with periods of both bullish and bearish momentum. The RSI consistently fluctuates above 50, indicating strengthening momentum. The recent close price of $1.53 combined with a forecast of $1.62 suggests a potential upward trajectory. We will implement a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels. Our primary strategy will be to identify potential buy opportunities when the RSI dips below 50 and the price approaches the support level of $1.19. For example, on November 7, 2025, the RSI was 48.7, and the price was $1.19. The entry price will be $1.19, with a stop-loss placed just below the support level at $1.15. The initial target price will be the resistance level of $1.67, but we will adjust this based on Bollinger Band signals. When the price touches the lower band, it indicates a potential buying opportunity. If the price breaks above the upper band, it signals a potential sell. If the RSI rises above 80, we will consider taking profits at $1.67. The combined strategy aims to capitalize on short-term price fluctuations while mitigating risk through strategic stop-loss placement and target price adjustments. Based on the historical data and forecast, Celestia has shown significant volatility with a recent downtrend followed by a recovery. The RSI consistently dipped below 30, indicating an oversold condition, but recently climbed above 50, suggesting a potential shift in momentum. Considering the support price of $1.01 and the forecast price hovering around $0.895 to $0.956, I recommend a contrarian strategy capitalizing on potential rebounds. I will initiate a long position at $0.895, placing a stop-loss order at $0.82 to limit potential losses if the downtrend continues. The initial target price will be $1.06, aiming to capture a portion of the recent recovery. To refine the strategy, I'll incorporate the Bollinger Bands. The price frequently touched the lower band, reinforcing the oversold signal. If the price bounces off the lower band around $0.895, it could signal a short-term upward movement. I will adjust the target price to $1.14 if the price breaks above the upper Bollinger Band, indicating strong bullish momentum. This portfolio combines the RSI and Bollinger Band signals for a more robust approach, balancing risk and reward with clear entry, stop-loss, and target levels. Based on the historical data and forecast, Near Protocol shows a volatile trend with periods of consolidation and upward movement. The RSI fluctuating between 31.1 and 64.0 indicates oversold and overbought conditions. The Bollinger Bands also suggest volatility, with prices frequently touching or crossing the upper and lower bands. Considering this, I propose a combined strategy utilizing RSI and Bollinger Bands for optimal returns. Initially, we will focus on a long position when the RSI reaches an oversold level below 30, combined with the price touching the lower Bollinger Band. The entry price will be $1.83, with a stop-loss set at $1.75 to mitigate potential losses. The initial target price will be $2.3, based on the center of the Bollinger Bands. Subsequently, as the price approaches the target, we'll reassess the situation. If the RSI rises above 70, indicating an overbought condition, we'll consider taking profits or tightening the stop-loss. The forecast data suggests a potential upward trend, with prices reaching $2.7. Therefore, we can adjust the target price to $2.7. If the price breaks above the resistance level of $3.06, we will consider a further upward adjustment of the target price. This combined strategy, incorporating RSI and Bollinger Bands, aims to capitalize on Near Protocol's volatility while managing risk through strategic entry, stop-loss, and target prices. Based on the historical data and forecast, Sonic has been experiencing a downtrend, showing considerable volatility. The RSI consistently dips below 30, indicating oversold conditions, while the Bollinger Bands show a narrowing range, suggesting a potential breakout. The support price remains stable at $0.161, while the resistance is at $0.172. Considering the forecast for the next week, the price is expected to fluctuate around $0.134 to $0.145, indicating continued downward pressure. Therefore, I recommend a contrarian strategy, anticipating a potential reversal. My strategy is to initiate a long position when the RSI falls below 20, signaling a strong oversold condition. Specifically, I suggest entering a long position at $0.134. The stop-loss should be placed just below the support level at $0.154 to limit potential losses. The initial target price is set at the resistance level of $0.172, aiming for a quick profit. If the price reaches the target, I would move the stop-loss to break even to protect gains and consider a second target at $0.191. This strategy combines RSI, Bollinger Bands, and support/resistance levels to maximize potential returns while managing risk effectively. Based on the historical data and forecast, StarkNet shows a recent upward trend, although with significant volatility. The RSI has been fluctuating, recently crossing 60, indicating an overbought condition on November 7th. Considering the support price of $0.138 and resistance price of $0.147, and the forecast showing prices above $0.119, I recommend a moderately bullish strategy. We will implement a combined RSI and Bollinger Band strategy, prioritizing entries during brief dips. Specifically, I suggest entering a long position at $0.119 when the RSI dips below 40, which happened on November 6. Set a stop loss at $0.106, just below the lower Bollinger Band on November 6, to protect against a sudden downturn. The initial target price is $0.13, aligning with the forecast for November 9. If the price reaches $0.13, we will adjust the stop loss to $0.12 to secure profits and allow for further upside. The final target price is $0.136, based on the forecast for November 14. This combined strategy leverages both momentum and volatility indicators for a balanced approach to maximizing returns while managing risk. Based on the historical data and forecast, Arweave exhibits a strong upward trend, particularly evident in the recent surge to $8.04. The RSI consistently moves above 30, indicating increasing buying momentum. The Bollinger Bands are widening, suggesting increased volatility and potential for further price movement. Given this, I recommend a long position strategy. The entry price should be $5.61, coinciding with the first day of the forecast period and a relatively low price point. A stop loss should be placed at $5.2, just below the bottom of the Bollinger Band to protect against potential downside risk. The initial target price is $6.62, aligning with the forecast for November 11, 2025. To maximize returns, I propose a dynamic target price strategy. As the price approaches $6.62, move the stop loss to break even. If the price continues to rise, adjust the target price to $7.49 on November 13, 2025. If the price reaches $7.49, consider taking partial profits and moving the stop loss to $7.2. Finally, if the price reaches the forecast high of $8.11 on November 14, 2025, secure full profits and consider re-evaluating the position based on updated market conditions. This layered approach allows for capturing significant gains while mitigating risk. Based on the historical data and forecast, Artificial Superintelligence Alliance shows a volatile trend with periods of consolidation and significant price swings. The RSI consistently dips below 30, indicating oversold conditions, and briefly spikes above 60, suggesting overbought territory. The Bollinger Bands have been widening, confirming increased volatility. Considering the support price of $0.28 and the resistance price of $0.555, and the forecast price trending upwards, I recommend a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels. My strategy involves a long position entry when the RSI falls below 20 and the price touches the support level of $0.28. The entry price will be $0.28. A stop-loss order should be placed just below the bottom of the Bollinger Bands, around $0.18, to protect against unexpected downside. The initial target price is the resistance level of $0.555, aiming for a significant gain. However, to capitalize on potential further upside, I will implement a trailing stop-loss strategy, adjusting the stop-loss upwards as the price increases, maintaining a distance from the bottom Bollinger Band. The final target price will be $0.315 based on the forecast data. This approach balances risk mitigation with the opportunity for substantial profits in a volatile market. Based on the historical data and forecast, Filecoin has shown significant volatility, particularly with a surge to $3.46 on November 7, 2025. The RSI indicates periods of oversold and overbought conditions, with a recent peak of $80.7, suggesting a potential pullback. The Bollinger Bands have been widening, indicating increased volatility and potential price movement. I propose a strategy combining RSI and Bollinger Bands to capitalize on this volatility. We will initiate a long position when the RSI falls below 20 and the price touches the bottom of the Bollinger Bands, which occurred on November 7, 2025, when the price was $3.46. The entry price will be $3.46, with a stop-loss placed just below the bottom of the Bollinger Bands at $2.98. The target price will be set at the resistance level of $3.52, aiming for a quick profit. Considering the forecast data, the price is projected to continue rising, reaching $3.36 on November 14, 2025. Therefore, I recommend holding the position until the target price of $3.52 is reached or the RSI approaches the overbought level of 80, indicating a potential reversal. If the price reaches $3.52, we will take profits. If the RSI reaches 80, we will consider closing the position to avoid potential losses. This combined strategy leverages both momentum and volatility indicators for optimal risk-reward management, targeting a high-return investment in Filecoin.